Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video. Today's date is June 17th, Monday, June 17th. So we're starting the trading week with the Kickstart video. In this video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. From a technical perspective, focus on this chart mostly, but I'll throw in a little fundamentals in there as well, as we had a pretty busy week last week from a fundamental perspective. So let's talk about the charts, talk about what they're telling us, and we'll see what that may tell us about trading today. So let's get started. Looking at the euro versus US dollar on the 4-hour chart, in trading last week, we had a sharp move to the upside into the CPI data. The CPI data came in stronger than or weaker than expected on Wednesday, and then we had the FOMC rate decision, and things were a little bit more hawkish than expectations. We started to see the price move back to the downside here in the euro versus US dollar. Remember, the ECB did cut rates. The Federal Reserve said, well, we only see one rate cut in 2024, and that is going to be an issue for. I'm going to start by taking a look at the euro versus US dollar on the 4-hour chart, and what we saw last week was a initially a move to the downside that found support in this swing area through here. That was also near the 61.8% retracement of this move to the upside right through here. Good support buyers came in there, and we came into the US CPI data. Saw that was much better than expectations, moving all the way up to our high price area through here, which is defined by different swing highs and lows through over the last few weeks. Found willing sellers. FOMC then came in and said, well, we only see one rate cut in 2024. That was a bit of a surprise, and that started to reverse the process in the euro versus US dollar, with the euro moving lower and the dollar moving higher. Remember, the ECB did cut rates, even though it was a quote-unquote hawkish cut. But the FOMC seemed to say, like, well, if we get one cut, that's going to be it in 2024. So that helped to increase the value of the US dollar, of course, and we fell sharply into Friday's close. The low price that we saw in Friday took the price to the lowest level since May 1st, before rebounding into the close. And in trading here today, we are seeing a very narrow trading range, but more of a bias more to the upside. The euro versus US dollar is one of the strongest levels, albeit in a fairly limited trading range for most of the major currency pairs to start the trading week. But tactically, I could say that the price is moving up toward what should be resistance here in this pair near the 61.8%, near the swing area between 1.07198 and 1.07346. Recall that the price did, as I mentioned already, come down into this swing area earlier in the trading week last week. Found support buyers against that level right here, and actually here, and here and here, but then broke below that level, heading to the lows for the week. So what was once support through here becomes resistance right now. And that resistance comes between the 1.07198 and 1.07346. I would expect that sellers would look to lean against this area with a stop on a break above. If it does break above this level, then that would disprove or give the sellers on the break some pretty strong cause for pause. This was a pretty solid break to the downside here, and we need to, what was once support is now resistance, and a move back above that level would certainly disappoint the sellers on that break. Let's take a look at the dollar versus yen next, and we'll look at the hourly chart for this currency pair. And just cutting to the chase, the low price that we saw in trading here today needed to get below the 100-hour moving average to increase the bearish bias. Admittedly, in trading last week, the price did trade above and below that 100-hour moving average on a number of different occasions before finally breaking above and sort of using that 100-bar moving average to support during Friday's trade. In trading here today, the market originally moved higher, but then moved down lower to test that 100-hour moving average. And this time, buyers came in against that level like it did right here, and found buyers once again. So the buyers remain more in control in the dollar versus yen. Recall that last week the Bank of Japan did meet, and they refused to stop the buying of their Japanese bonds. They pushed that off until July, so pass the buck for another month. to see what develops in their economy. So that is somewhat negative for the yen, and we're seeing that being manifested in the trading here today. The price did move above the high price that we saw in the end of May, right through here near the 157.70 level, and that opens the door for the high price right here at 158.248 as the next key target. Close support is now at the 157.70 level for the dollar versus yen. Going to the daily chart to see where this high price sits in relation to the history. We go back to the month of April here, the end of April, where the price did spike to the upside. Remember, getting above the 160 level was somewhat concerning before the Bank of Japan intervention, and we did see some intervention when the price did break above the 160 level up to 160.20. We saw a sharp move to the downside and then a move back higher and then a rotation back again on some intervention concerns. So where the price low came in against this old ceiling right here and forced price back to the upside. So, the Bank of Japan did buy some time over the last few months with this intervention right through here, but we're now getting up to those points where it's like, are they going to come in again? That might give you a trader some cause for pause above the 157.70 level. But technically speaking, as long as the price remains above that 157.70 level, the bias remains more to the upside for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And in trading in this currency pair, we fell sharply last week. Here's Friday's trade, and what sticks out to me is how the price fell below the 200-hour moving average, the 100-hour moving average, 100-bar moving average on the 4-hour chart on Thursday's trade, rebounded into the close on Thursday, right up to the 200-hour moving average. And on Friday, we did find resistance sellers against that 200-hour moving average before breaking to the downside. That move to the downside took the price below the 100-bar moving average or the 200-bar moving average on the 4-hour chart. Here, it should have opened the door for further selling toward the 38.2 and the 100-day moving average. However, that selling did dry up. We rotated higher back into this swing area right through here. You can see the number of different times that the price came down into this swing area, forming this floor right through here, including last Monday's trade. So getting this area remains a key level, and although the price did move above it in late Friday afternoon trading and trading here today in the Asian session, we more or less did find sellers against that level, pushing the price to the downside. So coming into today, this area right through here between the 200-bar moving average and the high of the swing area at 126.858 is going to be resistance. And as long as the price can remain below that level, the sellers remain more in control. On the downside, we have that 38.2% retracement. By the way, that is of the move up from the April low right here to the June high right here. That 38.2 comes in at 126.845, and then the 100-day moving average at 126.386. We haven't been below that 100-day moving average since this day right here. So that's a number of different days that the price has been able to stay above that level. So getting below the 100-day moving average has certainly opened the door for further selling in the sterling versus US dollar. So that's my tech look at 3 currency pairs to start off your trading week. Maybe give you the roadmap for the week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.